Hi everyone, welcome to the session, Digital Commerce Liftoff. I'm Chanelle Denton from Wimbart PR. We are a boutique PR agency based in London and we specialise in African tech. So I'm joined today by Mesh from Sendy, Deepankar from Omnibiz, Emi from Paystack, and Malik, who's of council from TMP. So I'm just going to let them introduce themselves and provide some context around what their companies do. So, should we start with you?
Hari?
Hi guys, I'm Deepankar, an Indian by origin based in Africa for the last 24 years. Have been working in the SME tech space for a decade. Omnibiz is a B2B commerce play, digitizing the traditional trade in the economy, based out of India.
Hi everyone, my name is Mesh, co-founder and CEO at Sendy. At Sendy, we are building a fulfillment infrastructure for e-commerce and consumer brands across multiple markets in Africa.
Hi everyone, my name is Malik Bukola of council at TMP. TMP is a full-service law firm based in Lagos, Nigeria.
Hi everyone, my name is Emi. I'm Chief of Staff at Paystack. At Paystack, we help businesses across Africa get paid by anyone and anywhere in the world. We launched in 2016 and are currently live in Nigeria, Ghana, and South Africa, and expanding throughout to 2022 in other markets. Our main products are collections, so can you get paid with multiple payment methods, but also disbursements or payouts, so how can you transfer money as a business to different stakeholders in multiple countries and currencies.
Yeah, okay. All right, so during the session we're going to be talking about we'll be looking at simplified business models, B2B versus B2C, and innovation and growth, fintech, investment. We'll be covering all of it. So I thought I'd just paint a picture of the landscape that digital commerce currently has at the moment. So digital commerce has raised an estimated 120 million in 2020, and that tripled in 2021. Online shopping generated over 27 billion in 2020, and 850 billion worth of consumer goods are sold in Africa. So we'll be looking at how this has all come about in the ecosystem. And of course, there's lots of notable players aside from those that are here, the likes of Twitter, Watch, MaxAV in Egypt, Market Force, of course, you might have seen the news yesterday of their fundraise. So there's lots of players within the digital commerce landscape that are really driving change within the sector. So I want to start asking questions. What challenges were you looking to address in the market, and how has your tech solved issues so far? And we can just work our way down. So do you want to start?
Sure. So the challenge we're trying to solve is, in the traditional trade, there was hardly any visibility of how trade was happening from the distributor to the retailers. And because of this, challenges of the retailers were expanding, were becoming bigger with the pandemic. So having inconsistent supply, inefficient working capital, limited working capital, and no or limited data to grow their business. These are some of the challenges we are trying to solve for the retailer, and making the supply chain more efficient across the chain from the manufacturer to the retailer.
And Mesh, how has Sendy been able to address the challenges, and what were those challenges specifically?
Yeah, so what we've seen is, most businesses today, and also small businesses, you have companies solving for payments, they can now pay digitally. Some of these businesses are now having platforms like social media, Facebook and the rest to kind of like sell stuff online. The biggest challenge we've seen is how do you actually get these goods to the consumers or to the retailers? And that's a problem that we're solving. You look at the cost of a product on the shelf, the cost of that, if you look at logistics or basically the whole supply chain component, contributes about 60% of the cost of that product. So if you're buying a product, say for $10, about $5 to $6 is logistics. And that's what we're trying to reduce. So how do we actually help these businesses efficiently and affordably get these goods to the consumers or to the retailers?
Yeah, thank you. From the legal perspective, a couple of challenges actually that helps the growth of businesses, right? Starting from even the ideation stage, right? Helping them structure their business right and helping them know the right business structures to adopt going forward, right onto their funding stage, helping them understand what funding is, right? And then for the regulated businesses or the highly regulated businesses, just helping them understand these regulations and how it applies to their business. A lot of business risk shut down if they don't comply. So it's a whole lot of trying to make them understand at the early stages what they need to do to comply and how to essentially grow their business. Then also looking at expansion. When businesses are expanding across Africa, they need support in terms of how they manage taxation, in terms of how they approach regulators and things like that. So essentially that's where firm comes into support.
I think that when we think about e-commerce or digital commerce, there are usually three pieces that come together. One, which is the underlying infrastructure, which is payments, which obviously Paystack solves for or tries to solve for, and I can go into this a bit more. The second one is the logistics, who some of us are going to address today, and then the third one is trust, which I also think that Paystack addresses in some way. So going back to the first one being payments, basically at Paystack we're trying to make it very easy for any businesses to collect their payments, whether it is locally or internationally, so accept payments from international customers through multiple payment methods. So not only cards or bank transfers, which are the most traditional ones, but also where basically the money flows, so including mobile money and other alternative payment methods. And by providing APIs that allow businesses to integrate very easily a payment service to their business, we're allowing them to basically scale and to reach customers that they weren't able to reach to before. And I think on the trust aspect, by also building a service that is extremely reliable, where we're literally asking people to put in the card details on a platform that they don't know, and to trust that then the product is going to arrive at their doorstep. We also have a responsibility as a payment provider to give guidance on what is this whole process, what is happening when you're swiping a card, and how are you protected as a merchant, but also as a customer throughout the process and where the money flows.
So that's interesting that you're talking about trust and the fact that some of your customers might not know of Paystack. And obviously, here in this room, this event knows Paystack. So how are you able to drive online adoption?
Yes, so one thing that I didn't fully explain, so we have the two main products at Paystack, which are the collections and then the disbursement. Something that we launched in 2020 is actually Paystack Commerce, which is basically a toolkit for merchants to easily start selling online. So it was coming from the premise of how can I start selling tomorrow with no integration, no code, the products that I might be already selling either on social media or offline, and how can this process be smoother? So by putting in the hands of the merchants those tools, we're basically giving them visibility, but also giving them a platform that allows them to showcase their products. So whether it is a full storefront where they have multiple products that are available, or single products that they can just upload and then share with the rest of their customers, either via social media or on their existing platforms. So this is first driving their volume because they have access to more channels with more payment methods, but then it also allows them to just grow their business in a way that is less stringent than having to set up a whole website with all the integrations and all the providers that you might need.
And Dee, how would you say that you're driving online adoption? Sorry, how would you say you're driving adoption of your products?
So the customers we deal with are the layer who are dealing in essential goods. These are the retailers, the open market distributors. Adoption for them is a tough one. So you have to make the product really simple, and you have to incentivize, align their incentives in a way that they can see the benefits in the first transaction. So when the retailers come online, they should be able to see everything they want to buy is available in a single place, and it's at the price where they were buying from open markets, or comparable price where they were buying offline. So adoption for us is continuous training and reminders, making the product simple, intuitive, engage efficiently with them, so the adoption continues to scale.
Okay, thank you. And on that also, which I guess you can also respond to, Dee, would you say that e-commerce is going to eliminate the existing players in the market or empower them? And with that, I mean like last mile delivery drivers, manufacturers, and like smaller merchants. So I'll repeat the question. So do you think e-commerce is going to eliminate the existing players in the market or empower them?
Absolutely. So there are 3 layers here in the e-commerce space, digitizing commerce across any channel. Right? Here, the people who stock the products, are they digitized? The people who deliver the products, are they digitized? And the people who are placing the orders, are they getting the value that they need? In our case, what we see as the market evolving, that if you want to scale, you will need to digitize the existing players rather than eliminating them. A large number of players are replacing the essential players like distributors, trying to replace the logistics providers by creating their own channel, creating their own warehouses, creating logistics network on their own. This is not a very scalable manner, and we don't see this scaling up across Africa.
Yeah.
So we believe strongly in digitizing the existing chain to scale and to capture the market.
Yeah. And Mesh, how would you say, with a slightly different business model, how you're able to sort of empower those that are already within the system?
Yeah, so if you're an online business, I mean, you're either selling to retailers or selling to consumers, and you want to get this product to your customers, I mean, you'd have to work with multiple providers, about 5 providers. You're just a provider, your warehouse providers, or you're storing this stuff at home, and the cost is just prohibitive. So as I said, you're buying an item, we see this across the markets that we work in. The average checkout size that we see is about, outside phones and electronics, is about $10. Now, as a business, you're selling something worth $10, and then logistics, it's going to take you about $5 or $6 to deliver it. I mean, you can't grow. So we're actually creating a whole new category with what we're doing, because we're taking that cost almost 5x from about $5 or $6 to about $1 to get that product to the customer. So for us, we're not actually replacing anyone, but we're actually creating a whole new category there by working, obstructing the whole thing, the whole supply chain of this small business. You actually go online, and whatever channel you're using, you push a button to your customer. We handle everything, so we build technology on top of that to get this product to your customers as efficient and affordable as possible.
I do think that's quite an important response from both of you, because people have this idea of digitization is literally like removing people from their businesses or their work. So it's great to know that there's a lot of empowerment going on within this space. Do you have anything?
Yeah. It's not directly tied to what Paystack is doing, but I think to a larger scale what we can see happening in e-commerce, where we might empower existing traditional players to play just a bigger role in the value chain. And I'm thinking mostly of agent networks. So if we think of agent networks here in Kenya, where mostly M-Pesa agents, or the agents in Nigeria who almost play a role of like online ATMs, even in the context of e-commerce, they have a very key role. So they can facilitate the transaction. So if they have POS devices, they're able to not only do the usual cash in, cash out, but actually process the cards or receive payments if the POS allows it through other payment methods. So it becomes a new point of transaction that might actually increase the trust if people don't want to necessarily pay online. They can pick up their products there or pay for them there. And the second bit that I wanted to share was around this delivery. And as the last mile delivery is always almost getting more and more complicated, even if there are more and more players in the space, maybe we can think of a way of using those agents as delivery points. And companies are starting to explore this already, like Copia, for example, of how do we make the agents become the pickup or drop-off point for this merchandise, which also serves the refund aspect. So a lot of people are still not buying online because they don't know what the refund process is going to be like. But if I can go to my agent and I know and I trust this person who is going to deliver it back to the company, then it also enables an increase in volume.
Okay, thank you. And as we talk about transactions, let's talk about the importance of embedded finance in the ecosystem. Should we start with? Do you want to say something, Malik?
Yeah, so I think with embedded finance is it's very critical, especially in the African markets where like a lot of merchants are struggling with being able to finance their business. So unlike major fintechs, that's very easy for them to just like raise money and be able to finance business. Smaller merchants might find it a bit more difficult. But having embedded finance in some of these payment systems and having like some form of collaboration, right, would really help to drive a lot of inclusion, right, at the end of the day. So I think it's a critical part to look at. And when it comes to where lawyers come in all of this, right, it is a part that speaks to collaboration. Like there's really need for lawyers to be able to figure out how best to foster collaboration as opposed to like competition. Competition is good. I mean, it offers diversity in the market, but it's very important to be able to drive more of collaboration than competition. And I think embedded finance sort of brings to bear, especially that factor, and helps to drive e-commerce in Africa. I mean, a lot of businesses have died over the years as a result of not being able to finance their business. But with embedded finance, I mean, people take credits, people finance transactions, and that has really helped businesses scale on so many fronts. And that's very, very encouraged at this point here.
Mesh, what would you say about the importance of embedded finance? I know it's something that usually evolves within e-commerce as opposed to a starting point.
Yes, so the way we look at that, I mean, for us as Sendy, our mission is to make it easy for these businesses to trade. And when you look at trade, we break that into three components. For trade to happen, you need markets. And for markets to work, you need logistics and financial services. We've talked about markets, markets talk about logistics, and financial services basically completes that piece of the puzzle. And I think based on how we see these businesses transact, we're actually meeting them where they are, we're seeing real data in terms of how they're actually transacting, and kind of embedding that those financial services products there actually help these businesses grow. And they're able to sell more, they're able to, either you're financing the inventory or you're financing your working capital as well. So we see that as an opportunity to help them actually accelerate and grow faster.
Okay. And as we talked about acceleration, COVID, as much as we are probably tired of talking about it, but COVID was a huge accelerator for e-commerce in various ways. Was there any agility within your business model to accommodate sort of the challenges of COVID? Deep, you can answer that.
Sure. I think when people are used to doing things in a particular way, till the time they're not pushed to experiment or do things out of the box, they're not investing time to think at alternate ways. So in the larger commerce space, people were comfortable with doing business as is. With pandemic, there were a lot of things that were shaken up. There were a lot of elements of the trade, from the supply chain, from the logistics, to the banking. Banks were not available for a couple of days when there were lockdowns. How would trade function? People needed to eat, people needed to consume beverages and continue the day-to-day life. So people were motivated to try new things. That's why the offtake or adoption to new technologies in this duration in any category has been great, and commerce was the leader in this because people wanted to stay home, wanted to stay safe, wanted to try, not do cash transactions, do payments, so they don't have to touch, they don't have to interact with as many people. So yeah, I think when in this period of pandemic, people were pushed, people were encouraged to try new things, and it had a great impact on the adoption. Retailers who had never done digital transactions, who used to off their data on their phone, only switch it on when they wanted to send a WhatsApp to someone. Those retailers now are waiting for notifications on prices, waiting for stock delivery through their phones. So I see a huge change in this.
Mesh, what kind of changes did you apply or see during that period?
I mean, for us, we had to move quite fast. It was a moment. It was kind of like an inflection point for us. I mean, it's something we have been watching for years in terms of like how the numbers are actually growing year on year. And when the pandemic hit, we saw those numbers kind of surge. We're seeing those numbers now triple year on year since the pandemic hit. And for us, we had to like adopt and kind of expand quite fast to be able to accommodate that. Because we knew that's going to be sustained over the years. So I think for us, it's something we've been building for a long time, and this was just an acceleration for our business to kind of like move quite faster to be able to keep up with those volumes.
Oh, so there was anticipation, like, okay.
Yeah, I mean, it was. I say this. It was for us. It was a moment of when Netflix moved from DVD to online streaming. So we were selling DVD for a couple of years, and I just started streaming when the
Oh, we'll tell that to Blockbuster. All right. Okay, so let's also, you mentioned a bit about regulation, Malik. Let's talk about, how important regulation and licensing is, and at what point do startups need to start thinking about that and having that kind of conversation?
Yeah, thanks. I think regulation plays a very important role. I mean, primary role of regulation is to balance the interest of all parties at the end of the day, right? So you have like the consumers of the product, you have like the retailers, and then you have like those ones providing one form of service or the other. And there's need to be able to balance the interest amongst everyone at the end of the day. Right. One thing about regulation is that it will not always be friendly, right? Since the aim is to balance the interest of everyone, right? So someone will be hurt at some point, right? And that's why it's very, very critical, right, to understand regulation right from the start before you venture into a particular business, right? It's not enough for you to have a market, right? It's not enough for you to have a very good product fit for market. Right, it's very critical for you to look at regulation as well, right? And there's like a couple of ways to look at it. I mean, you can either decide to go head on and get regulated, or find ways you can again partner with people to make the regulation work for you, right, for a while, and then look to regulation at some point where you're more stable, right? Which is like why I appreciate the work that even Paystack is doing. Right, so I speak for Paystack as well for living enough, yeah. In helping startups learn about compliance more, I mean, a lot of times you see startups asking for regulatory guidance, right? Whilst a lot of firms, TNP provides that advisory service, right? At the early stages, even at the ideation stage where you're still thinking about a BNPL, right? Say, for example, in Kenya, if you're thinking about buy now, pay later, you might want to look at like the digital lending regulations to see how it affects your business, or you may want to remodel that business, right? And there are a couple of business models you can actually adopt, right, at the end of the day. But if you don't know then you go head on into it, and then at the end of the day, something happens and then you get shut down, right? Another example is even in Nigeria where you had regulation around the ride-hailing companies, bike-hailing companies, as they call them, right? Now they've pivoted from mobility to some kind of logistics. But just imagine if early on they understood, because that law has always been there, right? I think from 2018 they understood the importance of regulations and how it could impact their business. And also understanding the importance of lobbying. Because when you talk about regulation, it's not enough to just know what the law is, but it's also very good to be able to speak to the regulators, right? Understand their perspective, and then come up with innovative ways of helping them solve the same problem. Because you just find that regulators come up with laws and legislations that may not exactly fit a particular product type, say maybe a very novel product at the end of the day. But because part of it touches on your product, you find that you're the regulator as a whole. But imagine if the regulator understands what you're doing, right? Maybe through the lawyers providing you with advice as to how to engage them, right? At the very early stages, it's very possible for you to get very good leniency in terms of no objection letters, and maybe even get into some kind of sandbox environment where the regulators understand what you're doing and then determine how best to regulate your product. But without that in place, it's very difficult, and a lot of startups make that mistake at the early stages. They don't really care about the lawyers, right? And they start to think about lawyers only when there's a problem. But you need to think about lawyers even before you start, because that's the only way you can actually overcome some of these challenges. So I would say from the ideation stage, yes, you should definitely engage a lawyer to help you scale your business.
All right, thank you.
Sorry, I think just taking us back a little bit to embedded finance conversation and probably the regulation bit, I think that they actually work pretty much together. On paper, it sounds very, very sexy to have embedded financial products in your product, even if it's not your core, especially as an e-commerce. So how do we start providing, a wallet or loans for our customers or their end users? But there is a core regulatory aspect to it. And some players might forget about it. But there are other ways of almost bypassing this, and I think that collaboration and partnerships is extremely important to do that. So back to the example of Paystack, even if our core product is a checkout option, is there a way for us to add a BNPL player, as you mentioned, to this interface so that the end user, but also the merchants can benefit from this additional financial service? If it is for working capital, for large businesses, is there a way for us to partner with them so that businesses can get loans at better rates? So I think that there's a lot of collaboration that needs to happen instead of necessarily jumping into the bath of let's all do financial services.
So use the resources that are already trying to test it. So basically using what's already available, like the stuff that can use
Exactly.
in the market.
Because there's a lot of new verticals that are coming up, right? With a great amount of specialization that can also come with the specific licenses to be able to do just what you've signed up for. So if it's loan, it's only loan. If it's just a store of value or a wallet, it's only that. But it doesn't mean that you can only operate within this landscape. There's a lot more you can actually.
Okay, that's quite a crucial thing, because I guess a lot of people have in their blueprint expansion and scale, and they can, focus on that if they also partner with, the likes of Paystack
Or other companies.
or other companies.
Not just
the likes of. All right. And what do you think investors are looking for in this market? And I'll ask. Do you want to answer that?
The commerce market is huge. So the digitization initiative in each aspect, whether you're talking about essential goods, whether you're talking about fashion, whether you're talking about any category, the market is huge and digitization is to happen. The investors are looking at ways, are looking at markets, are looking at players who can, with minimum investment, bring in majority change, bring in majority transformation. So an investor's approach to this digitization or take the commerce online and make it digital is how it can be done with minimum amount of investment. If you see the examples in the last, you mentioned about it, in the last 2 years, we've seen great amount of investment coming in various different models, whether it was BNPL, whether it was P2P commerce, whether it was payments. These are all parts of the larger change commerce. And everyone sees that this is unavoidable. So if you can have players like Paystack or like Sendy who are digitizing a larger problem with minimum investment, with crowdsourcing, making existing players more relevant, investors are interested and scaling that market.
Okay. All right. Mesh, do you want to next one?
Yeah, so I would say if you look at the fastest growing countries today, they're not, most of them are in Africa. Ivory Coast is one way top there. And then if you look at the digital economy as well, Africa is leading in that as well. Penetration, growth is about 18% compared to I think about 12%.
Second largest.
Yeah, second largest, sorry, yeah. And then if you look at now the digital economy, it's only 2%, and that's growing quite rapidly. So it's going to be a new category. And I think it's a new category that investors are keen at looking at. And as companies in this space, whether it's creating markets or creating the logistics space or in the payment space, I think we're going to create these new categories in the next couple of years. And I think that's what investors are also looking for as well.
Malik, do you want to answer that? Yeah? Okay. All right. Do you want to add anything?
I'm probably not in the best position to speak, but in general, on top of everything that's been said, I think that investors are also looking for models that are not only scalable but sustainable.
Yeah.
So it's not only about throwing money to get like that hockey stick in the beginning and have a lot of users. There's also like what is the behavior of these users if it's B2B or B2C? It's the same, like, is there a repeat business? Is there a real case for the use of this product and is there value in it? Or are we just throwing marketing dollars at it to see the growth?
Yeah, okay. And on that, everybody, fundraise stories, they get a lot of attention. There's a lot of buzz when we, especially when we see the big numbers. What would you say these fundraise signifies to a company's operation? Like, do you think it's like a key signal to their actual operations? Go ahead.
I think fundraise is a symbol of various elements. Number one, confidence of the investors, confidence of the growth potential in that industry, in that company, in that team. But along with that, the fundraisers that we've been hearing about is also very related to what can be done with that money, how much impact. So companies raising $10 million, $100 million, what can be the outcome of that investment in that industry. So it's very, very important for companies in this space to raise capital because again, it's a large market. Creating an impact requires the money, but like she mentioned, it's also very important that impact needs to be sustained. So is this business being built to throw away money, or is this business being built to create value? So these fundraisers need to be channelized in the right direction to create long-term value for the market, for the stakeholders, and finally for the investors.
Matt?
Yeah, I think it's a good signal for the market, and it just shows that the opportunity is there across the continent. And of course, for the companies themselves, for us to be able to have a massive impact, you need the capital to be able to do that, and also accelerate that as well at scale. Getting the right talent, being in multiple countries. You spoke about how that's also a bit difficult from a legal perspective. We need to invest in that to be able to have this massive impact that some of these companies also trying to do.
Yeah, I think it's Fundraising is definitely a good signal, like everyone has said. But I have like a slightly different take on certain things. I mean, I feel that fundraising, whilst it helps with the PR and the whole lot of
Hey, that's my bread and butter.
yeah, but there's like a lot on companies to deliver value at the end of the day, right? It's not enough to announce fundraisers. Actual profitability is what matters, right? At the end, and then I feel like companies just feel a lot of startups assume the actual amount of capital they need, like a lot of assumption around that, and I feel that it's very important to not overraise sometimes, because I guess it can be good to say, oh, you just raised like the first $1 million and all that, but it's very more important to focus on what you intend to do with that money that you've raised and how you intend to deliver value over time, as much as you also are looking at profitability of the business at the end of the day.
And can you just, could you talk about the importance of like how a startup who is, looking for fundraising, whether it's like the first or second round, being comfortable with the terms, like not selling themselves short on those fundraisers?
Yeah, I think it's important to know what you want, right, from your business. I think that's what comes first, right? A lot of startups are willing to give out control for like smallest fundraise, right, just to get out of business. But it's quite important for you to look at it from a longer-term perspective, right? How long you intend to be in charge of your business, how long you intend to like grow your business, how you intend to direct your business. And again, it's quite important to also look at alignment. A lot of businesses make mistakes in terms of like how they align with their investors, right? They just like want the money as opposed to actually wanting an investor that actually promotes the business or helps the business to grow. At the end of the day, you get like investors who are not going to help your business move forward. I mean, there's like an example in Nigeria of, I think in 2018 or 2019, a particular fintech that got investment from a particular entity. And when it was time for further fundraise, the particular investor refused to divest its interest in the company. That company had to shut down today. I mean, it could have been like one of the very good fintech companies around, right? So you just want to make sure there's alignment in terms of like how the investor wants to see that your business grows. You also want to make sure that you're doing your right due diligence, right? I mean, there's a lot of rage about doing due diligence on like startups, but like how much due diligence are you doing on your investors as well? I mean, you want to look at the kind of investors you're bringing on board. What companies are they invested in the past? How have those companies done? How successful are they? Right? You just want to make sure that you're watertight on those fronts, right? As well. And in terms of the terms, right? Again, depending on your goal, depending on your exit plan, at the end of the day, you want to make sure that the terms there will allow you to run your company as you should and exit as you want to, right? Whether by way of IPO or by acquisition or I don't know, depending on what your exit plan is or like how many years it takes for you to exit the company, right? You just need to make sure that you have all those terms sorted out. And it's very critical for you to disclose this to your lawyers upfront, because a lot of times you're negotiating the deal, but you don't exactly understand what the startup wants, right? So you end up negotiating what is fair industry-wide, but the problem is that the actual aim of the startup might end up being defeated, right? Some startups would rather raise, say, equity rounds instead of, like, say, debt equity, for example, right? Whereas debt equity might actually be best for their business model or for even like their long-term goals. So we just want to make sure that you're very aligned with your lawyers, right, at the very early stages. Another important point for lawyers is the fact that a lot of founders do have issues along the line, right? There's a proverb from my place that says there's never a problem until you introduce money, right? So when you have like an investor coming in, that's when you start like seeing people coming up with like various kinds of like issues, right, within the company, right, and doing the way with lawyers at the early stages who could be like your mediator, right? right? Helping you see the long-term goal, helping you ring the aim, like what your objectives are, what you intend to set out to do, right, at the end of the day, is very critical. But a lot of startups overlook these things, and they're very, very important as well. Yeah.
Okay. So for like Mesh and Deep, who
That is going to help you scale. Look at it in that manner and scale the business, create it for tomorrow. And I think it should work.
okay, all right. Emily, what would you say are what would you say the future of commerce, like e-commerce, in the next like 3 to 5 years?
Well, I was looking to the investing dynamics. I think that there's something that we haven't spoken about, which is around social commerce, that is already existing, but for which there are no real end-to-end tools and end-to-end processes for either solopreneurs or creators to just effectively sell these products or these services. So right now, if you think of someone selling something on, I'm going to use a practical example. My Nigerian colleagues always mention the hair businesses. That is a very big business in Nigeria. So someone selling basically hair either through WhatsApp, through Twitter, or on Facebook. Right now, there's a lot of like manual interaction that is happening, and there needs to be constant engagement from the merchant from the moment that there's a request until the moment of delivery or post-delivery. That is just not scalable. Even if you hire more people to deal with your chat or with your inventory, your deliveries, you're still going to reach this bottleneck. So, and there's a lot of back and forth between the different platforms. So the interaction starts within the social media, but then quickly evolves into other platforms. So I think that if we find better ways to integrate those different tools, it's definitely going to be a lot more inclusive, and there's going to be a lot more diversity in terms of the merchants that play in the game, because then they can see the real value. And the real value is not always saying you want a beautiful checkout page online. It can just be, this is the way that I'm doing business today, so how can I make it more efficient for me to, back to what we were saying, drive my volumes or like have more reach to the customers that I wasn't able to speak to before.
And Mesh, what would you say the future of e-commerce is going to look like?
Yeah, I think the future of e-commerce in Africa is going to be social. I mean, we're seeing lots of businesses selling on WhatsApp, Instagram, Facebook, and we're seeing that trend kind of going quite fast. And for us, it would be like, how do we actually bundle these tools together to be able to help them grow and kind of get this to the consumers or the retailers that actually sell to. I mean, outside electronics, I mean, we think that on the social commerce side, that's where we're going to see the most growth, and that's where the future lies. And most of the small businesses, I mean, when the pandemic hit, most small businesses went online on Facebook, Instagram, or WhatsApp to reach their customers. And that trend is going to be sustained in the next couple of years.
Okay, so Deep, for you, just change the question slightly, because you deal with informal retailers who are selling mostly like essential goods, right? So how do you see the future of e-commerce for them specifically?
So Chanelle, I'll continue with answering that part of the question, what do I see as for future of e-commerce, and then in the B2B commerce space, in the essential goods space, how it will go. Today there was a discussion going on about, is Africa really ready? How many companies are coming close to profitability? Is e-commerce really the future? Maybe the infrastructure is not ready, but I think that's where the opportunity is. There is a huge opportunity in creating that infrastructure. Every industry we are talking about is enabling e-commerce, and e-commerce has to be the reality here, because in other parts of the world, the offline commerce has a great experience. The reality here is going and purchasing products in Nigeria, going and purchasing products in Kenya and various other parts of Africa does not have that class, does not have that experience which people are comparing with in other parts of the world. Here, e-commerce is offering a much better experience. You stay back and you get the goods delivered, and you have a much larger variety to order from using your social commerce, your platforms. So future of e-commerce, if it's going to be somewhere where it's going to be a key part of every individual's life, it's going to be in Africa. In the B2B commerce space, e-commerce or digital commerce is essential. It is the only way value can be created across the chain. If you do not digitize it, I mean, we spoke about embedded finance or BNPL, but the reason there is limited working capital is, or why BNPL is coming at crazy prices, is because these retailers are not digitized. You can't go to a retailer and ask them what your history of the last 6 months transaction looks like, and we'll give you a loan based on that. So it is, for B2B commerce, it is essential. There is a huge variety. There is a huge gap being created in the supply chain because of expiring products, because of wastages, because of pilferages, thefts, around payments. All this will be wiped off, and everyone in the chain will be able to make more money from the retailer to the logistics provider to the distributor. So it's essential in the B2B commerce space for the e-commerce to scale up and create the next trading platform for the continent.
Okay. So just on that, and this is to anyone who can take this on. Obviously, due to digitization, you're collecting a lot of data, right? How do you think e-commerce will be using that data, in the future?
The data is key. What we do with the data today is we add value to each of the stakeholders, starting from the manufacturers who didn't have, after producing the goods, manufacturers in majority of our markets didn't know in which markets are they stock out, where they're losing sales because of lack of availability, where they are overstocked, where their average size are reducing. But with digital commerce, this data becomes handy. They can take better decisions on a day-to-day basis rather than waiting for a 3-month-old report to come from a research agency. Similarly, a retailer can be recommended. So if a retailer today in Nigeria wants to know, I have 200,000 naira worth of working capital, what should I keep in my store? It's only his dad who can tell him what he should keep. It just goes in the family. Otherwise, there is no data point that can recommend to him or her how he should stock the outlet to get the optimum return on investment. These are data points that are available to every in every other country for the trade to make better decisions, but they are lacking here. So this data is being utilized to provide support to the entire trade chain for them to make better decisions.
Yeah, maybe just to add to that, I think that something that we also need to get better at is not only consuming the data as a company or as a provider, but then also giving that data to our merchants or to our customers for them to make better decisions. So there's a big education part that needs to happen together, because we obviously all learn from each other, so that we make those decisions better. Because in the end, if it's just a platform creating another layer of data and analytics that need to plug into, it doesn't really solve the problem, right? It needs to empower first the merchants and eventually the users to make those better decisions.
So if I may also add on data from the legal perspective, is the need to ensure data ethics. I won't say data protection because I feel like a lot of talks have happened around data protection, but I mean, just want to look inward, right? Am I using this data the right way I'm supposed to be using it? Am I using this data for what I've told the owner of the data that I'm going to be using it for? So you need to be able to ask yourself those questions each time you're dealing with data. And of course, data protection then comes into play where you need to make sure that you keep that data in such a way that is very secure, right? And then, of course, it still goes back to being able to make sure that data doesn't flow into the wrong hands, because I know a lot of companies are actually looking at generating so much data right, to be able to drive the market force in the right direction, I mean, adverts and all that, right? But at the end of the day, it's very important what you deal with data, and when you're creating a product that's going to be dealing with data, and you need to make sure you build data privacy like as part of your design, and that's like very, very key as well.
Okay, thank you. Did you want to add?
Yeah, just to the data point, I wanted to add some of the initiatives that are being taken, that are happening in the e-commerce industry, again like BNPL, they could turn out to be a curse instead of a boon for the trade if they are not data driven. Because it's not just the company will suffer if the money does not come back, but the retailer or the individual who is taking the BNPL, if he is taking more credit that he can service, he is going to go in a vicious cycle of continuing to service that credit that he has taken. So data should be the underlying factor with which startups look at scaling up, providing value, creating value for these stakeholders. Otherwise, there's no difference between a brick and mortar way of doing things and of startup doing things in digital.
I think we can maybe ask anybody has any questions at this point. Anyone? Yeah, you do? Okay. I wasn't actually prepared to get out. Oh, all right.
Maybe in the meantime, I actually have a question for you from like a PR perspective. So you mentioned earlier that a lot of companies come to you for press releases around their raises, but I'm also curious to know when you look at either e-commerce or just tech companies in general, like what are their main needs in terms of communication and how they want to appear publicly and how they're building their public narrative.
Okay, so we do a lot of fundraisers, which is true, but we don't necessarily get clients based on the fact that they're fundraising. So what we tend to do is we will ask about a company's journey, about their vision, looking at the impact, the metrics that they have, and that's how we tend to pull a narrative together. And that narrative is usually, yes, geared to partnerships and investment, and then obviously once they do fundraise, the story then changes to be about the kind of expansions they might have, or C-suite hires. But we take on clients based on their journey, and not all the journey is just based on the fact that they're going to be fundraising. In fact, one of the clients that I've been working on for the past 2 years, we haven't done a fundraise story. So it's been about just high impact, about their growth, the impact that they're having in former retailers, their hires, the fact that they've been able to go from like 80 staff to I think 800 in just a few years. So there's different ways to tell a story that is very nuanced, that shows growth without actually talking about fundraising. And I think that's what Deep was saying, like the optimization of a company is actually more important than like the big the fundraise stories, because inevitably that money will come, right? So it's about how a company is optimizing, and for us, that's where the juicy storytelling is. It's not just about the fundraising, because yeah, you can raise that money, but then what are you doing with it, and what have you done? Like, what has been the journey, coming up to that fundraise, and what will be the journey going forward? So for us, there has to be a story.
Hello? Okay. Hi. Yeah, I'm Sendy from Renaissance Capital. My question is for you, Deep. You made a point around I guess, 2 different models for inventory replenishment. So one is where people replace the value chain, and the alternative is what you do, which is you work with the existing value chain. So there was a company we were speaking with yesterday, which is probably more like your model. And the question we couldn't find an answer to is, which is the more profitable approach? Right? So I'm trying to get a sense from you as to what your thoughts are on that particular question, given the difference in approach.
So I'm sorry, but I want to add a question to that. So my question is, the business you're in, margins are generally low, but numbers are high. Right? How do you get margins? How do you get better margins while not losing your share. So perhaps it's an add-on question.
So yes, there are these two models that exist. One is a model where you replace the existing infrastructure and create your own parallel infrastructure to get early on margins. So when you create a warehouse and you're doing logistics yourself, yes, initially the margins will look better than the margins on the other side if you see it on an Excel sheet. Because at that point in time, you're not taking in account for all the different costs that will come in with warehousing, with logistics, with becoming asset heavy, all the different costs that will come in. By being asset light, what majority of the companies are doing is they're creating a digital infrastructure. So to give you an example, there are close to 60,000 distributors just in Nigeria. They are keeping goods worth $20 billion in a year. And at this point in time, there is no way you can find out what is stocked where in what quantities. So if this digital infrastructure enables you, then you don't have to service goods from 20 kilometers and 30 kilometers. You can actually service goods from 2 kilometers. That brings in a lot of cost efficiency both in warehousing and in logistics. So over the longer period of time, the asset light is going to have way more margins comparatively compared to asset heavy. But obviously, if you look at it at the onset alone, till the time the digital stock point network, digital logistics network is not created, it would look higher margins on one side than the other. Does that answer your question? In terms of creating margins across the chain, any essential good category where there is high frequency, there are low margins. You have to try and see where there can be more value created. Like Mesh was saying, that in logistics, an average cost of a distributor doing logistics in an unplanned manner is 7 to 8%. But when you do digital logistics, when you are planning a batch, when you are creating batch, that cost can be reduced to 3 to 4%. So that 4% is an incremental margin to be made in the process. So yes, it is a low margin category, high frequency category, but if you find out where value can be added, there is great money to be made. Okay.
Anybody else have a question? No, don't think so. No more questions? Okay. All right, well, I think that concludes then.